Hey, Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson at 3, and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air on 790. KBC, streaming live online worldwide at kbc.com. And, of course, the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all of your favorite podcast platforms. The fourth quarter of 2025 kicking off with a partial federal government shutdown and record highs for the Dow and the S&P 500. Gold also kissing a record high, and looks like the cryptos had a good day as well. Wall Street largely shrugging off the economic impact of the partial government shutdown for the time being. Stocks rising to record highs today after the government entered its first shutdown in 7 years. Investors now turning their focus to the latest reading on jobs, and the reading that we'll not be getting on Friday, the big enchilada of monthly economic reports, which is the Labor Department's monthly jobs report, will not be coming out because of this partial government shutdown. Investors turning their attention today to the ADP private payrolls report, which helped underscore bets on near-term rate cuts by the Federal Reserve. The Dow came in for a closing gain of 43 points at 46,441, extending September's rally. The S&P 500 up 23 points to 6711, popping above 6,700 for the first time, also at a record high for that broadly based index. And the NASDAQ moved up nearly 100 points to 22,755, just below its all-time high. The Bureau of Labor Statistics was set to release the jobs report on Friday, but the non-farm payrolls update is likely to be delayed, we're told, as the agency plans to completely cease operations with just one full-time employee kept there in his or her position. The Federal Reserve already staring down the tough task of determining interest rate policy in the midst of what's turning out to be a sluggish labor market picture, as well as inflation uncertainty. Now the government shutdown can make the Fed's job even more difficult by delaying the release of important economic reports, including the jobs report that was expected to come out on Friday. As far as that ADP report, we got that news today. Private payrolls seeing their biggest decline in 2.5 years for the month of September, a further sign of labor market weakening. Companies cut a seasonally adjusted 32,000 jobs during the month, the biggest slide since March of 2023, according to ADP. Most economists were looking for an increase of about 45 to 50,000. The industrial side of the economy, meanwhile, contracted in September for the 7th month in a row, according to another survey today from the Institute for Supply Management. Companies struggling to deal with high tariffs, rising prices, and reduced demand from customers. Most manufacturers have responded by scaling back production plans and reducing employment to contain costs. That's significant because the Los Angeles area is the largest manufacturing region in the United States. Intel and Advanced Micro Devices are rivals and might soon be partners. There's a lot of interesting things going on here with Intel. The chip companies are in early-stage discussions reportedly over AMD potentially becoming a customer for Intel's foundry business. Semaphore reported that today, citing unnamed people familiar with what's going on there. Gold, meanwhile, hitting record highs, surging past 3,900 an ounce before cutting gains, and right now gold is just below 3,900. Silver also has seen an impressive run-up of 29% just in the last 3 months, in the last quarter. Silver right now is just above $47 an ounce, making a run for its all-time high last seen back in 1979. Bitcoin, meanwhile, also moved higher, briefly topping 118,000 today. Right now it's just below 118,000. Coming up this hour, I'll bring in some top economists, including prominent economist Christopher Thornberg at Beacon Economics, based right here in Southern California. Also, Mark HAMRICK, Washington Bureau Chief and Senior Analyst at Bankrate.com, also award-winning business and financial news journalist. He'll be joining us live from Washington with the very latest on the partial government shutdown and what that means to you. Joining us now on Your Money, the markets, the economy, gold, crypto, and the whole works now, and including the kickoff to the fourth quarter of 2025. With us now, Gabriel Wisdom with American Money Management and author of Wisdom on value investing. Gabriel Wisdom, thank you very much for taking the call here this afternoon.
Well, thank you, Frank. What a quarter it was. And even today, we see another record high. That brings us to 29 record highs so far this year. Some, if not all of us, are somewhat worrisome about these price levels, but history shows that markets continue to climb generally after reaching record highs. A recent example, a very dramatic example, would be 2021. There were 70 all-time highs, and we've got 29 all-time highs now. Still, there are concerns about elevated valuations for good reason. Those magnificent 7 technology stocks, powered mostly by hopes for artificial intelligence and infrastructure, they've increased the market concentration. And the third quarter also saw the One Big Beautiful Bill Act, which certainly brought some clarity to the tax landscape for this year and beyond. But the new tax law is projected to add some $3.4 trillion to the federal deficit over the next decade. So perhaps one bright spot of the government slowdown is we spend less money, and that, at least in the very short run, might be beneficial.
On the air live with Gabriel Wisdom with American Money Management. Of course, we were on the air during the last big partial government shutdown. I know you're also a market historian. Historically, how does the market react to these kind of situations?
Usually the government shutdowns don't affect the markets, and it's because public companies generally think 6 to 12 months ahead. They've got their supply chains all lined up. And if you look at the current earnings environment, Frank, it suggests that business conditions are probably more robust than many people expect. The latest reporting season delivered some really good results. 79% of the Standard & Poor's 500 companies beat analyst expectations on revenue, and 80% exceeded earnings expectations. And by the way, that figure is well above the long-run average, which is about 60%. So, the economy is pretty hot. All 11 sectors of those S&P 500 companies are projected to report strong growth over the next 12 months. Even the laggards like energy, utilities, and consumer staples are all positive as far as forecasts go.
All right, the Magnificent One in the Mag 7, NVIDIA at a record high, by the way, above $187 today. Intel catching quite a buzz in the last couple of months here with these various deals, including all of us taxpayers now taking a stake in Intel. That stock is all the way up to just shy of $36 a share now. Now AMD maybe teaming up with them. What do you think of Intel and these deals surrounding Intel?
Well, everybody seems to want to get involved with Intel now that we, the American public, have a stake. We're competing in a world where other countries do play by different rules. There's been a lot of concern about the U.S. government making equity investments in Intel or TSMC or that materials company, et cetera. But we're surviving in a world of adversaries that play by a different set of rules, and they do the same thing. So we've got one of the biggest companies in the world, Intel, really on the ropes. And we need semiconductors, we need chips, we need foundries, we need all of that. So, the stock is suddenly looking attractive. It's still well below its all-time highs.
All right, the third quarter of 25 went into the Wall Street history books with more record highs. September is usually not a great month for stocks, as you noted at the beginning of September, but it certainly was impressive this year.
Well, that's right, Frank. We at the beginning of September, we were asking what could possibly go wrong in September, and the answer was pretty much everything, because historically September is the worst market month of the year. It's mostly flat, and it wasn't this time around. But we should be asking what could possibly go wrong in October with the government shut down, and there are a number of open-air indicators that have been around a long time, and they're telling me that the economy is contracting. For example, U.S. box makers are cutting back on production. Boxes, cardboard boxes, that's all the stuff that consumers buy, and they're making fewer boxes because of lackluster demand. And then there's the funny kinds of open-air indicators like skirt hemlines, and there's the dry cleaners index. You don't need to dry clean your clothes quite so often, so dry cleaning revenues go down. But the really big one is restaurants, and restaurants have been contending with a new wave of economic challenges like menu inflation, labor costs. I mean, we've seen all of them post declining sales. And then Halloween coming up. Home Depot says their Halloween sales are slumping. The demand for their giant 12-foot skeleton is way down, and that tells you something.
Right. Remember, another indicator, and I'll ask you about the hemlines in just a second, but what about costumes for pets? Is that up or down? That's also been an economic indicator over the years as well. What about the hemlines? Are they going up or down?
I try not to look. I'm just not, I don't want my wife to feel uncomfortable.
Okay. All right. We'll skip that one then. And so now the Fed is going to have to do without this latest reading on jobs for the month of September for the time being. Have we ever seen a situation like this where the monthly jobs report has been delayed because of a partial government shutdown? And what does this mean for the Federal Reserve's decision-making process?
Well, we've seen it before, but this softening labor market might be the biggest source of and the most legitimate source of recession concerns, because unemployment is historically low, but the pace of job creation has slowed a lot, as we saw in the most recent report. We're not going to get the Bureau of Labor Statistics numbers on Friday, but they'll be back in business, and they calculate every year at the end of the year, and even they go 12 months out into March, and the BLS will finalize these statistics in early 2026. But I think we've got a shortage of labor, not jobs, and that's what's showing up. That's the Federal Reserve's real conundrum here, is that there is inflation, and there's job growth. There's just fewer people interested in taking the jobs.
All right. One person left at the BLS there is going to do all the heavy lifting, apparently, down to one employee that hasn't been laid off yet. Be interesting to see and find out who that is, by the way. But what about the expectations here now for additional rate cuts? Are things getting ugly enough for more outsized cuts, or do you think the Fed will stick to the signals here of two more quarter-point cuts before the end of the year?
Well, Frank, the bond market is usually the canary in the coal mine, and volatility for bonds is at a 3-year low. Ordinarily, when we expect rough times, investors in bonds hold back for higher rates of return on those bonds, and so there's a lot of selling that occurs until the yield on those bonds is attractive again. But right now, that's not the case. The Federal Reserve shift toward rate cuts, I think, provided some support for existing bondholders, in particular the big pension plans that own a lot of bonds. And so, that's great. Bonds have a traditional role as a ballast or stabilizer in large portfolios, and we're not getting any yellow or red flag indications here.
All right. And certainly in the face of this uncertainty, gold has hit another record high above $3,900 an ounce, making a run for $4,000 here in silver, getting close to the all-time high, which was last seen back in 1979. What are the metals telling us, and where do you see the metals go from here?
Well, I think they're really telling us that the geopolitical tensions and the weakness in major currencies, including the dollar, is a major concern. Gold's reached now, I think, 39 or 40 record highs so far this year. And there are multiple, I'd call them converging factors that suggest it's going higher. Central banks are on track to buy 1,000 metric tons of gold by the end of this year. But the thing about gold and silver is they pay you nothing while you hold them. And so they're great during global financial crises. But over the long run, stocks, even though they've experienced many drawdowns over the past couple decades, they performed quite a bit better than gold, over the full period. Silver, there's just not enough of it. And we've got the new green emphasis. We've got data centers that need to be built. We need silver, we need copper, and there's just not enough of those metals.
All right. What have you come around on cryptos here? Bitcoin did rebound today above 118,000. Anything that's catching your attention in the crypto space here?
I'll tell you what's catching my attention, Frank. There's hundreds of these crypto plays on the market. There were a number of initial public offerings. There's new exchange-traded funds. There's the digital asset treasury companies now, what being called DATCOs. Hundreds of public companies also want to emulate Michael Saylor's company approach. Strategy is the company that's been buying Bitcoin instead of dollars and treasuries. I think it's very risky, but there are a number of companies that are accumulating crypto, in particular Bitcoin. I get it. Tens of billions of dollars in fresh capital from non-crypto buyers has been going into the market. So, you just have to sometimes go with the flow.
Yeah. All right. At this point, Gabriel Wisdom, let me ask you the big question here. Any specific places where you're putting money now and or taking it off the table?
Well, Frank, today we saw Eli Lilly jump almost 9%, and we saw Pfizer do pretty well because they secured a deal with the government to lower some of their U.S. drug prices. It's being called Trump RX, or the administration's new plan to advance the most favored nation initiative. The policy would basically aim to lower the cost paid by wealthy nations, in particular, like the United States. So the drug companies that have been left behind, I think, are worth a look. Pfizer's been going nowhere for a very long time. It's not anywhere near its all-time highs, and this could be the next Intel. I'm looking at it. I like Lilly at these prices. I also like a number of the traditional big pharma companies that haven't participated. Bristol Myers, Merck, they're all cheap by historical standards.
Gabriel Wisdom with American Money Management and author of Wisdom on Value Investing. Gabriel, thank you very much for taking the call. Another big day here to kick off the fourth quarter of 2025. I look forward to speaking with you again very soon. Thank you very much for taking the call here this afternoon.
Thank you, Frank.
Out to the freeways we go now on 790 KBC. Golden day on Wall Street as gold kisses a record high above $3,900 an ounce for the very first time, pulling back now to about 3,886. Silver continues its impressive run-up. Right now, hovering just above $47 an ounce. It did get above $48 earlier. We'll have a complete wrap-up here in just a second, but first, 790 KBC welcomes Brian Regan coming to the Long Beach Terrace Theater. Comedian Brian Regan coming to the Long Beach Terrace Theater March 7th, 2026. Tickets are on sale Friday at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show. Get that on your calendar. Tickets furnished by Live Nation. Caller 9 wins 1-888-790-5222. Mottek On Money continues here, 790 KBC. The Dow and S&P 500 closing at record highs to kick off the fourth quarter of 2025. Despite, or maybe because of, the partial government shutdown, the Dow moving up 43 points at 46,441. The S&P 500 closing up 23 points to a record high above 6,700 for the first time at 6,711. And the NASDAQ up 95 at 22,755. The yield on the 10-year note is back down to 4.10%. Oil hovering just above $61 a barrel here at the moment. Gold right now hovering at $38.86. Silver at $47.33. Bitcoin rebounded today above 118, right now just below 118,000. Ethereum at 4,316, Solana at 219, and Doge at the moment at 25 cents. And now the latest news on 790 KBC.
Hey, Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
Action.
Next Roll is a groundbreaking podcast created and executive produced by Vernon Davis.
This is where we talk about reinvention.
The series explores the transformative journeys of athletes, artists, comedians, and entrepreneurs.
They don't just stop here. They just keep going.
Next Roll isn't about what's next. It's about why they do it, how they overcome fear, and the resilience it takes to keep evolving at the highest level.
That's what it's all about. Stay tuned.
Next Roll with Vernon Davis. Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KBC. Record highs for stocks and gold in the face of a partial federal government shutdown, which kicked in early this morning, setting the stage for the furlough of hundreds of thousands of federal workers and also delaying some economic reports, including the big enchilada monthly economic reports, and that is a monthly jobs report we get from the Labor Department. Looks like we'll be seeing an economic data blackout during the shutdown this week. The September jobs report will not be released on Friday. The Federal Reserve, meanwhile, needs that report to make intelligent decisions on what to do, whether to cut rates again or hold the line. Let's bring in Mark HAMRICK now, Washington Bureau Chief and Senior Analyst at Bankrate.com, also award-winning business and financial journalist, joining us live from Washington. Mark, thank you very much for taking the call here this afternoon.
Good to be with you, my friend. Thanks for having me.
Wonderful to have you with us, Mark. And give us an update on the front line there in Washington as to how this thing kicked in overnight and what it means to Mr. and Mrs. Southern California especially.
Yeah, I think obviously the sort of low morale among federal workers has sort of been given another lease on life, and you know, this is something that's not unique to Trump administrations. We've had federal government shutdowns going back to 1980. We've had 10 episodes of that, but there has been this increasing length associated with them. And as you know, the one that began in late 2018 extended into early 2019 lasted 35 days, and we had one during the Obama administration that was associated with a credit downgrade that led to some sharp initial declines of the stock market, but over time that was a vestige of history. And so I think the thinking is that obviously people living around Southern California, throughout the state, throughout the nation, should expect that there are going to be some federal services that are not going to be delivered on time, but for so-called essential services, that will continue. Well, I think about an area like downtown Los Angeles, Frank, which has been so hollowed out since the pandemic, where let's say there may be federal workers working down there, some of whom are on furlough, and the mom and pop shop that makes sandwiches or salads nearby, reliant on those few federal workers who have been going into the office more recently, are now wondering, okay, where is that business going? And so there are contractors who work for the federal government. There are adjacent businesses that are dependent upon the federal government. Of course, all of us taxpayers suffer once again because essentially you have hundreds of thousands of federal workers who are on furlough, who will eventually be repaid but have to go without their incomes right now. And so essentially they will eventually be repaid for having done nothing but through no fault of their own.
On there live with Mark HAMRICK, Washington Bureau Chief and Senior Analyst at Bankrate.com. All excellent, important points there. And what about Social Security payments? Will they continue? I saw one write-up that indicates this partial government shutdown might impact the announcement on the cost of living increases and so forth.
Yeah, I think that definitely falls under the category of essential services, and so people who get regular payments from the federal government, I think, can properly expect for that to continue at LAX and other airports. We'll continue to see TSA agents and, of course, air traffic controllers showing up. To your point about the cost of living adjustment, that's a very good point, Frank, because the announcement is dependent upon the next iteration and release of the Consumer Price Index in the middle part of the month. And so what is expected to be an annual cost of living increase in the high 2% range is entirely dependent on having the release of the Consumer Price Index, and the inability to collect that data and then release their report means that announcement will be held up, and we don't know exactly what it might mean for, let's say, the back office part of making the adjustments to those checks next year may be affected. It's all wholly dependent on the duration of this shutdown, and another reason why, for the interest of all of us and not for those who are sort of wearing a red or blue jersey, cheering for their own political party's interests for the good of the American people, it would be a superior outcome if this could be resolved more quickly.
Live from Washington, we're on the air live with Mark Hamrick, Washington Bureau Chief and Senior Analyst at Bankrate.com. Now, have we seen a situation before where the jobs report was delayed because of a partial government shutdown? We're told that there's one person left there at the Bureau of Labor Statistics. Do we know who that is? And have you been in touch with that one person?
I have not, Frank. I guess that is in keeping with the notion of the survivor who, is left behind when other members of the cabinet attend the State of the Union address. But no, we're not going to get the jobs report on Friday. And, I've been talking about the need for robust and credible, trusted economic data for the better part of this year. As, for example, we had the head of the Bureau of Labor Statistics fired upon the release of, let's say, less than positive news on the job market a few months ago. There's been other drama about that unfolding in the last 24 hours with the nominee who the Trump administration put forward for that withdrawn because they were not seen as a credible candidate. But beyond the politics and the guts of the Bureau of Labor Statistics, we're all very dependent, Frank, whether we're consumers, investors, business operators, participants in the American economy, on credible and robust economic data. And it turns out the federal statistical agencies are the best source of that information. And so, to your point, we won't get the employment report on Friday, which is typically among the most important reports of the month, at a time when the job market is seen as an inflection point. The weakness of the job market, the principal reason why the Fed cut interest rates for the first time in a year last month. And we are awaiting the release of the Consumer Price Index, with inflation the principal irritant affecting consumers. And if we don't have either of those, which are associated with the Federal Reserve's main mission in life, stable prices, maximum employment, then it is lacking, let's say, superior data upon which to make its decision on interest rates at the end of the month.
On there live with Mark Hamrick, who, by the way, also attends the Fed's news conferences when the Fed chairman speaks. Jerome Powell, he's right there, and you get to ask the Fed chair questions there at these news conferences, and you're right there in the thick of it at the Federal Reserve when they make their announcements. And what is this delay in the jobs report going to mean, you think, in Fed decision making?
Yeah. Well, I think the Fed will make a decision based on the best information it has. It does have fantastic connections throughout the 12 Federal Reserve banks throughout the country. And you're quite familiar, Frank, with, for example, the Beige Book survey that will be released 2 weeks before the meeting at the end of the month. And that is a distillation of essentially anecdotal reports with business contacts throughout the country. And that's a very good report, meaning it's good quality information, but it's not the same as the jobs report. And so, as you know, Frank, typically 2 days before the release of the Bureau of Labor Statistics report, which would be Friday, we get a report from the payroll processing firm ADP. And that report today was quite illuminating because it reported an unusual contraction in private employment in the month of September. You had both the goods and service producing sectors with contractions or a decline in employment as well. And of the 10 sectors that it breaks down, only 3 had sectors that had a positive showing with jobs. And of course, we know that with the federal government, we had a report of a contraction in the month of June. So the narrative on the job market of late really has been one of cooling hiring. Not a lot of layoffs, but it's quite frustrating for anybody who's in the market for a job. And we are seeing some slowly uptick in the unemployment rate. And I'll give you a bit of a scoop here, Frank. We have just completed our survey of economists that we'll have a story published about in the coming days at Bankrate. And essentially, they look for payroll growth over the coming 12 months that will be below the rate of break even that would be needed to keep the unemployment rate from going higher. So they estimate that to be in the neighborhood of about 50,000 jobs a month in the number of jobs that will be added, but they say break even would require 60,000 jobs added a month over the next 12 months. And so that suggests that there is upside risk for the unemployment rate. They do not look for a spike in the unemployment rate, even I would say generally south of 5%, thinking about the fact that, of course, during the great financial crisis, the unemployment rate went up to 10%, and of course closer to 15% in the early days of the pandemic.
And regarding the ADP report, the expectation was of an increase of about 45 to 50,000. So what we got today was certainly significant. The stock market, meanwhile, cheering all of this. Is this a case of the market cheering bad news, which is good news on Wall Street, with the expectations that the Fed might do an outsized rate cut in the face of what you just described? Is that a possibility now?
Well, I could see some investors cheering for that, but I don't think the Fed is quite prepared to do that given the upside risks associated with inflation. But I think that investors are probably wise to take a long-term view of this federal government shutdown, acknowledging that we certainly can't predict the length of it, but it doesn't, I would say, smell like this will be a long-term shutdown, as we see some Democrats siding with Republicans to vote for the continuing resolution to fund the government, and we'll see whether that cracks further. But I think with respect to the outlook for interest rates, as you know, the forecast and even the indications from the Fed itself are that we may get 2 more interest rate cuts this year. But if we get some upside surprises to inflation, which could indeed result from the tariffs that are still unfolding before our very eyes, seemingly on an ongoing basis, I wouldn't say that we should bet on that in terms of an outcome. But investors have history lessons upon which to rely that indicate that this federal government shutdown will be resolved at some point, and that the economic damage from it will not be lasting, and that's indeed our hope as well.
Terrific, Mark. Thank you very much for that excellent update, and look forward to speaking again very, very soon. That is Mark Hamrick, Washington Bureau Chief, Senior Analyst at Bankrate.com, also award-winning and business financial news journalist. Thank you very much, Mark. Always great to speak with you, and we'll keep us updated on what's happening there, please.
My great pleasure and honor. Thanks so much, my friend.
Thank you very much, Mark Hamrick, live with us here on Mottek On Money on 790 KABC.
Hey, Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
Action.
Next Roll is a groundbreaking podcast created and executive produced by Vernon Davis.
This is where we talk about reinvention.
The series explores the transformative journeys of athletes, artists, comedians, and entrepreneurs.
They don't just stop here. They just keep going.
Next Roll isn't about what's next. It's about why they do it, how they overcome fear, and the resilience it takes to keep evolving at the highest level.
That's what it's all about. Stay tuned.
Next Roll with Vernon Davis. Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KABC. Add a partial government shutdown to uncertainty out there, as we just discussed with Mark Hamrick at Bankrate. Let's bring in another prominent economist here, and that is Christopher Thornberg, Beacon Economics, based right here in the Los Angeles area. Christopher Thornberg, always great to have you with us here. Thank you very much for taking the call.
Pleasure to be here, Frank.
Give us your assessment of the economy with uncertainty now about the job picture, this disappointing ADP report that came out today, and now looks like we're not going to be getting the big jobs report on Friday because of this partial government shutdown. Give us your assessment of things here at the moment.
Yeah, well, in this time of uncertainty, suddenly having no information at all is going to increase a lot of people's tensions. That said, look, up to this point in time, the economy actually is doing better than you might think, despite all those labor market numbers. Look, in the end, the BEA ended up revising up growth in the second quarter to almost 4%. Preliminary read on the third quarter is yet again about 4% growth. That comes from the GDP Now numbers. A lot of that is based on the fact that consumer spending seems to have come back. Industrial production is still ticking forward. Housing permits are slumping just a little bit, but believe it or not, housing starts still look pretty good, and you've actually seen an increase in sales because of the decline in interest rates. So if you look across the economy coming into the last quarter of the year, it does seem as if the U.S. economy has pretty good momentum, despite, of course, those issues we've seen with the labor markets.
What do you see happening here? How long do you think this partial government shutdown is going to go, and will there be massive layoffs in the federal workforce here?
Well, the massive layoffs things, as we all know, of course, Trump will try, but what will happen when that ends up in a court? More often than not, he continues to, if you will, overreach. He's an aggressive guy, like him or not. And sometimes it works for him, sometimes it doesn't. We'll see. As for how long this goes, I think this might end up going a little longer than people think, simply because of the fact that both sides are so entrenched, and the Republicans don't seem at all interested in making any attempt to be, if you will, reasonable or compromising. The net result of all that is again, this thing could drag on for a while. The key is when will it come to an end? And the answer is it's going to come to the end when the electorate finally gets fed up with it. And that typically tends to take place when, one, grandma's not getting her health care or Social Security check, or two, when you're trying to take the kids to a national park and it's closed. So when people start being denied services they really care about, that's when you're going to see a political ruckus rise and something will happen.
Looks like the Postal Service will still be operating. Nutrition programs will continue to operate. Public health, Medicare, we understand, will continue. The court system apparently will continue, well, at least until October 17th, according to one report I'm looking at here. But have we ever seen a situation where the jobs report has been delayed? I can't recall a situation like this, and at a critical moment here where the Federal Reserve is trying to make important decisions.
Yeah, no, I agree. It is obviously frustrating. But the labor numbers, of course, are not the only numbers. There's plenty of other ones. And again, given the overall economic momentum we seem to have at this particular point in time, it may not be as important of an indicator as people feel. Look, I know there's been a big job slowdown, and the labor market seems very cool. But keep in mind that while, say, for example, there's been a decline in hiring, there's also been a decline in separations. People aren't leaving their jobs either. Job openings rates are still looking fairly healthy at this particular point in time. There's been no initial rise in initial claims for unemployment insurance. And by the way, that signal will continue to operate because it works through state governments. And again, we can keep an eye on that as well. Look, one data point does not a trend make. And the idea that somehow or other, if we miss a report or two, we might miss the economy going into a depression, well, I don't feel that's a reasonable possibility at this particular point in time. So I'm not going to worry so much about it. I'm going to keep my eye on the bigger picture. And again, so far so good, at least for 2025.
All right. Live on the air with economist Christopher Thornberg. And you're one of us. You're right here in Los Angeles, Christopher Thornberg, and you're on the front line of the massive recovery that's continuing in the fire-scarred areas of Malibu, the Palisades, and Altadena. What is your assessment of this ongoing effort here?
Too slow, just too slow. And the reason it's too slow is one of the main reasons why we find it so hard to build housing, even in non-emergency situations. The wheels of bureaucracy are incredibly slow. It's so hard for people to get stuff done. There's too many overlapping controls. It takes forever to get answers. And what's happening is people are trying to rebuild their homes, and they're running into this. We've been told things were going to be easier, things are going to be quicker. It hasn't happened, and you're really starting to feel the anger from people in these neighborhoods.
Of course, many businesses and organizations here in the Los Angeles area rely on your assessments and reports, and I know you speak frequently at conferences. Anything you'd like to bring to our attention here now?
Well, actually, on October 6th in the morning, we will be with Pepperdine University for an LA Forecast Conference. We'll be down there at the California Club. If you look up the Pepperdine Forecast Conference, I'm sure you'll find us. Please come and join us. Besides the overall picture for the economy, we're also going to have a special panel discussing, of course, the budget situation. You know, it's interesting, as much as the economy is healthy, city budgets are not. And what this means, of course, is that these city budgets, the problems there, they're not cyclical. You can't just wait, they're going to go away. These are structural problems, and they need structural reforms. I think the quicker we have that conversation, the better off the city, this county is going to be. And what we're going to try and do there is really try to make that point and hopefully get a message across to city leaders that this is something you can't just ignore. You really got to dig in and find solutions.
All right. What about on the tariff front? The dust not yet settled here, and also the legal dust hasn't settled. What do you think is going to happen when the Supreme Court decides that important issue coming up?
Well, I'm not going to guess what the Supreme Court is going to say. They should say that he can't do it. To me, it's clearly he's overstepped his bounds on this particular front. But we don't know. That's a legal opinion, and I'm not a lawyer. That said, I will tell everybody that it really hasn't amounted to much. Look, our two biggest trading partners are Mexico and Canada. And Mexico and Canada, as long as they meet local sourcing rules, are still tariff-free. And that means over 80% of stuff coming out of Mexico and 90% stuff coming out of Canada, because of local sourcing rules, do not have any tariffs. To date, the nation has only collected about $100 billion in additional tariff revenues. I know that sounds like a big number, but keep something in mind. Even if by the end of the year it's $200 billion, you're talking about a $200 billion tax against a household base that has a disposable income of $22 trillion. So the
Chris,
numbers
we'll have to stop
really
there.
aren't.
Unfortunately, we are out of time, but let's do this again soon, and look forward to talking to you again very, very soon. Christopher Thornberg, economist, Beacon Economics, based right here in Los Angeles, live with us here on Mottek On Money on 790 KABC.
Bruin fans, fall is finally here. That means UCLA football is back in your life. Head out to the Rose Bowl to enjoy America's best tailgating and to make more unforgettable memories with the Bruins. Nico Iamaleava and the Bruins are ready to make an impact this year, and we need you cheering them at the Rose Bowl. Visit UCLABruins.com or call 310-UCLA-WIN to lock in your tickets today. 310-UCLA-WIN.